So I suppose interested to know why I focus on technicals over fundamental analysis within the markets that I operate in. There's a couple of reasons for that. One of them is I'm a visual person. I appealed to the kind of visuals, so technicals help me. Two, that there is a question about, let's say, the validity of the fundamental news that comes out, of exactly how accurate it is. And another element is that, I'm not a trader at a bank. I don't have a big floor full of like young, keen analysts who are poring over all of this government data, left, right, and centre, trying to interpret it. Okay, I'm a private trader. It's me. I have to be able to make a decision on whether to buy, to sell, or to sit on the sidelines. And so the technical analysis gives me a tool that I can make a decision for myself. Okay, it doesn't mean that technical analysis is automatically better than fundamental analysis or sentiment analysis. It's just a way and a means by which I can make a decision whether to go long, to go short, or to do nothing. And then I allow my kind of money management. The money management side of it is what actually helps me be profitable at that trading. So when I say that I've only really got 5% fundamental analysis, it's that I know when the big major news announcements are coming out, and that's about it. So I know when they're coming out. I stay away from them. I don't try and trade them. And if I have positions that are still on running going into big announcements, I have rules around what I do with those positions based upon the kind of the let's say the importance and the weight of the news that's coming out. Why should I sort of know my market in terms of the whole spread of it? Well, I would say fundamentals are important. It's just, for me, in terms of my ability to make a decision, I prefer technical analysis. Certainly everybody should know their markets, and that's one of the reasons that I preferred foreign exchange markets over, let's say, the sort of the US or the UK equity markets. The reason being that I look at 28 currencies. I focus on 15 of them, which are made up of kind of like 5 or 6 of the major currencies in the world. So actually, to keep abreast of them and what they're doing, and the kind of let's say the interrelationships between them, it's doable for me. Okay, as opposed to trying to understand what's going on in, let's say, every one of the FTSE 350 stocks, which I would never be able to keep on top of. It's just me, and then in the US there's thousands of individual stocks. So in terms of the fundamentals, it's a case of knowing when the big news is coming out, knowing when the kind of interest rate decisions are being made, because they play a big part in the foreign exchange markets, and just looking at the kind of the technical picture to know when to time my entry. When it's very nice when the fundamentals and the technicals line up, then there's great opportunities there. But it's primarily I'm just using technicals to give me a decision making tool. That's the way I look at it. Why do I have so many trading screens to look at? Well, I had a setup of kind of like 6 screens linked to a supercomputer and a couple of laptops there to give me kind of 8 screens to look at. Okay, and it's funny that when people come to sit with me or come to work with me, some of the boys, they get real screen envy. They're at home on their laptop and they see all of this. It's like it's like Cape Canaveral. It's kind of like space control and stuff. They go in and you see, and they all get, wow, look at this, this is amazing, fantastic. It's super cool. I want this. And actually, for the vast majority of people, it's pointless. Okay, I was fortunate in that I had a background in the military of the military spent an awful lot of money training me to have the mental capacity to be able to sort of sit and take in an awful lot of information in a snapshot and kind of build a picture in my head of what was going on and then make a decision and follow through on that. The vast majority of people have not had that kind of training, so they sit in front of 4, 6, 8 screens, okay, and there's actually just far too much data. It's just pumping out far too much information, and what tends to happen is then you get the kind of the old sort of analysis paralysis. There's just so much going on that the person either does nothing because they're just like that kind of, like the rabbit in the headlights, or they just start mashing keys and being impulsive in their trading because they're overloaded with data. So whilst it's nice to have, those kind of like nice, 4 or 6 screens, that is not a necessity to be able to trade well. If you can trade well on a laptop, okay, then you'll be able to trade well, regardless of what what your kind of super IT setup has. So you shouldn't think that you need that. It's a case of, if you can't trade well on your laptop, okay, or trade well on your desktop at home, getting another 6 to 8 screens isn't gonna improve your trading in that sense. Why do people like to follow trends? I think in terms of great trading profits can be made when you're trading in great trends, but there's a couple of things that kind of prevent a lot of people from profiting from trends. Firstly is actually knowing that the majority of market spends, it might actually only spend 20 to 30% of its time in a clear, defined, well-defined trend. Very often markets spend a lot of their time in kind of range-bound, in a range-bound environment. So it could just be bouncing between a level of support and resistance. So if a person has, let's say they've got a method that is a trend-following method, but the market is in a range-bound environment, then they're going to get chopped to pieces. One of the other things that that challenges people is that even when a market is in a trend, okay, and when it's actually just moving in a very nice smooth trend, is that human beings they take their profits too soon. They see a bit of profit on the table, especially if they've had a period of losses and they start to see a little bit of profit on the table, they kind of snatch at the profits. And so they need to find a very simple way that you can A, identify when there is a trend, B, join that trend, and C, stay with that trend, okay, in order to sort of acquire good results from it. So people love to trade trends, and trading trends can be very profitable, but there has to be a framework within which an individual trader operates that helps them make the most of when a good trend shows its face.